Hello and welcome to Pro Trader Strategies market commentary for Tuesday, June the 18th. My name's Eric Wilkinson with Pro Trader Strategies and Wolfman Options. Yes, you may recognize me as the Wolfman. I'm here to teach you guys some different option strategies you can then implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data. Across the pond, actually, let's talk about yesterday, because yesterday we got some economic data that I forgot to go over, and it was Empire State Manufacturing, and it came in at negative 8.6, expected to be a positive 12.1, so a massive miss on that number. And we did talk about the National Association of Independent Home Builders, but that didn't really cause a major drawdown in the equities today. As a matter of fact, we're starting to see a bit of a push to the upside, and I think that's because bad economic data is good for the equities, because now people are really trying to speak to the FOMC and say, hey, we need a rate cut. Now, a lot of people are talking that this rate or this rally is based on the fact that people believe that there is going to be a rate cut. I don't think that they're going to do it, not this soon. You know, we're going to have to keep an eye on that. The market is pushing higher, which is good for the most part, but I think that we could see another correction, especially when the market throws a tantrum when they don't get their cut. All right. So across the pond, not really a whole lot to see here. We did get European CPI, which is Consumer Price Index, came in at 1.2%, which is in line with expectations. Core CPI in line with expectations at 0.8%. Now here in the United States, we got building permits, 1,290,000 expected, or is what came out, expected to be 1,300,000. Housing starts came in at 1,270,000, expected to be 1,240,000. They revised last month's number up also from 124 million, or 1.24 million to 1.25 million, or 1.25 million. And that's about it for the economic data. Then we got the overall markets. Got crude oil moving a little bit higher today, a little bit outside of the point of control. That's not really unexpected. We've talked about this time and time again, where we believe that, or I believe that crude oil is going to be kind of stuck in its range as well. So we can take a look at this over here and see. I think that crude oil is going to stay right in between the $55 a barrel and $50 a barrel. I think that that's where we want to stay. I think that's going to be the best for the overall economy if we can stay down in and around that area there. So looking for crude oil to try to stay within this $55 to $50 a barrel, at least for the summer. That would be a great thing for the economy, I think. So I think that that would really kind of get the wheels turning here. Got gold moving higher. It's all about China and, you know, them holding on to precious metals and stuff like that, kind of holding back on allowing that into the open market. That's going to drive these prices higher. I am still short gold in the form of GDXJ, which is the junior gold miners. That's not looking too great today. It is pushing higher. GDL, the gold miners are also a lagger, which is a good thing in this instance. All right, bonds finally moving higher, busted above that 155 area. I didn't think we were going to be able to get above this, but this is a screaming representation of the Fed getting the markets trying to talk to them. I didn't think we were going to break above this 155. As a matter of fact, we went almost a point higher there and went and tested the 156 handle, which is a really a lot of rate cuts coming in to the market. I mean, that's probably 75 basis points to the Fed fund futures. All right, VIX coming off a little bit. It's still in the teens, but we've got a big rally in the Dow Jones, up 370 points. Just slightly off the highs, which were just made recently. You can see here 375 points on the day, blasting above the value area high. Now, we were talking about this as being the rubber band yesterday, where we would get a rubber band, and the tighter it goes, the more it wants to unwind when we get that type of scenario. Well, we didn't wind up a whole lot, but we are getting that snap out, and to the upside. Remember, I didn't know if we would make a move to the downside or the upside. When you get these types of tight wind-ups right here, it could have easily have created a bar like that. We didn't get that today. As a matter of fact, we got the move to the upside on this trade today, so breaking out of that range and above the value area high. So we could easily start to see this market want to go up and test this year's high, at least 2019 highs right here, relatively soon, a lot sooner than I expected. I was thinking it'd take about a week to meld at those levels, but tomorrow's another day. We could easily see this market really retrace almost all of the gains we saw today, which would bring us right back to the point of control. With the NASDAQ up 150 points, almost 2% on the day, definitely leading the charge. We can see the E-mini S&Ps up 35 points on the day, and again breaking out and away from the point of control, where we have recently seen the point of control move from here, this level, up, which is a sign of bullishness. Now, the market could have grasped onto that as it saw the paradigm shift higher. Then that gets the shorts. If you are short down on this move here, you're going to be panicking to get out now, because it looks like we are looking to test the highs and maybe go finally print those highs that we saw printed in the overnight session. Remember, I've talked about this before also, that it is a mark that the day session wants to trade for that to be a real print, okay, a real all-time high. So the market looks like it may want to go and try and print that in as a target. That's going to be a bullet on the market's shoulders or on its back, that the market wants to go there and do it. I'm just telling you, that's really what we see with these. When the market gets it in its head that it needs to go out there and print those, that's what we're probably going to do. Now, this is where I was talking. You can see this looks like that whole rubber band winding up real tight, and then we get the snap higher here. It's a little bit easier to see on this chart here, where we've broken out of that range finally and are peeling to the highs. So we only got about 50 points to go to make about 55 points, let's call it, to go to print those all-time highs in the day session. So it looks like, with overnight inventory here, we can see we got overnight inventory got long. Overnight inventory got a little bit long here, and there was no attempt overnight or during the day session to flush these guys out, and I don't think that is going to happen today. There's just too much bullishness in the market right now. So you can see the market wants to print higher. No concern about the overnight inventory being long as well. That is another sign of bullishness. So I think that we are looking to go and print those highs, just the way that this market's reacting right now anyway, before we get any type of retracement. I haven't added anything to my portfolio. As a matter of fact, I've only taken stuff out, and with Apple is one of those. Got the nice move in my direction, volatility coming out of it. That's what I was looking for yesterday. I told you I needed about another point higher to be able to get out of that for 50% of my max profit. And if you guys remember, I went into the July because I was selling premium, looking for that premium theta decay component that we talk about in these or in the webinars. And you can see here that I got the volatility coming out of it. So we got directional move to the upside. I got the volatility coming out a little bit. That helps me with this particular strategy. And like I said, I went into the July and I had sold the 165 puts in there for 89 cents, and I was able to cover those back this morning for 30 cents. That originally sold those July 165 puts for 89 cents, and I was able to get out for 30 cents this morning. All right, so like I said, all of the things market move, especially this big move today, up almost 5.5 points, a little bit better than that, allowed me to get out for better than 50% of my max profit yesterday. Like I said, I was trying to get out for about 40 cents. Another dime today helped me out. So that never got close to my bid. As a matter of fact, I think the lowest I saw the bid was 42 cents yesterday. Today, bought it right basically on the open, maybe 5-10 minutes afterwards. So you probably get a little bit better pricing now that the market's even higher than what we were this morning. So out of the Apple trade as of now. So got that move. Everything else still working. Qualcomm, all of those trades. Qualcomm's not looking too great right now at this point, nor is my TLT. So I'm going to let those meld because I think that the bonds are still overdone to the upside. So I'm going to ride that out a little bit longer before I pull the ripcord on those. And that's all I got for you guys. Check out the webinars. We are moving into a neutral bias. So if you have a neutral bias in the market, we are going to find the right strategy for the environment around XYZ or whatever stock you're looking at with a neutral bias. I'm going to show you what the strategies are that you can implement to increase your probabilities of success. So check that out at protraderstrategies.com or check out some of my webinars at wolfmanoptions.com. All right. Oh, one last thing. Give us a thumbs up on Facebook. Like these videos. Like our page so that you can see them first off. We're getting these out there a little bit faster, and we found that the way to get these to you the quickest is probably through Facebook, and you can watch those videos a little bit sooner than what you would probably be able to see when we send them out in the emails and stuff like that. So it'll be a little bit more pertinent and time sensitive. All right, that's all I got for you. If you can't take that, take it easy.